Yeah, this is Business Nigeria now. And a bit to cushion the twin effects of rising inflationary pressure and foreign exchange volatility on the Nigerian economy. The Central Bank of Nigeria has directed deposit money banks in the country to pay savings deposit account holders on interest of 30% of the current 14% monetary policy rate, reverting to what was in 2020 before the COVID-19 pandemic era. The Apex Bank in a circular noted that the development is aimed at stimulating growth in the larger economy following the economic slowdown occasioned by the pandemic. It will interest you to know that savings deposit rates are the interest rates that accrue to customers for keeping their money with commercial banks. And joining me live here in our studios to give more insight and perspective to this development is an investment strategist, Temitokpe Omosu. He joins me live here. Well, good to have you.
Thank you.
With us. Is this good news for Nigerians?
Well, yes. So, a large extent, I think it's a good news because, in a way, we've been talking about the fact that real return has been negative for quite a while. Even though with this current savings rate, it's still negative, but you know that the negative would have been slimmer. It's now narrow. So, I think it's a plus for Nigerian depositors.
And what does it translate to? What does it mean for Nigerians? More money for their bank accounts and pockets?
Yeah. So I think, well, when you look at interest rate or savings rate and its impact on savings and what the CBN intends to achieve with this increase in savings rate from 10% to 30% of MPR, it's quite obvious that, yes, we've been struggling with inflation, for a very long time now. In fact, before the outbreak of the COVID-19 pandemic and into the rift between Russia and Ukraine, that led to the increase in inflation. Yes, money supply has been, adjudged as one of the drivers of inflation in Nigeria. So I think, yes, increasing savings rate is quite good for, for savers. At least you'll be able to get more money on your savings. In addition to that, it's also a pointer to the market, to the financial market. In fact, it's changing the atmosphere of savings. So when savers come to financial institution now, they ask for higher rate because they're already seeing that MPR is going up and the savings rate, is also up. So all of those are helping investors to have higher bargaining power so as to get, more money on their savings. But it's quite evident that, you can only save if you have income. So a bit of analysis we've done at AfroInvest, we observed that, the impact of your disposable income is more on savings than interest rate. So what I mean by that is, you can only save what you have after you have met consumption. And your income will either be divided into consumption or savings. So if income is not so much, it's going to take a toll on what you have left for savings after you have covered for consumption. So we notice that, yes, interest rate increase is very important for financial institutions in terms of savings mobilization. However, income level in Nigeria is also very important. It's very, very important.
Yes. Well, I wonder if the country has seen any significant growth in the last 2 years. Is the economy back to normal after the COVID-19 pandemic?
I think, well, I would say that to some extent, the economy has achieved a level of, improvement. And because, as a result of the pandemic, we saw what economists call the negative output gap. We are performing below potential. But because of a bit of, improvement that we saw in 2021, particularly, that has taken us a bit higher. But the current impact of the Russian-Ukraine crisis could also impair the growth because, for every economy that is struggling with inflation, it could actually impair the economy negatively because in an inflationary environment, it's actually is characterized by high level of uncertainties. Investors who want to draw back, and consumers as well, they are also apprehensive. They would want to front load. So when there are so many uncertainties in the economy, it takes a toll on, investment. And investment is a key component of consumption of the economy. In fact, it's also affecting the government. Inflation is affecting the government because when you check government budget, you see that there are a lot of assumptions from exchange rate and inflation. So if those assumptions are not met, it's going to take a toll, on government spend. The government spend is also a component of, it's also a component of GDP. If you also look at the external sector as well, if manufacturers are struggling with inflation locally, it will affect their productive capacity. It also takes a toll on export and net export, which is a component of GDP. So when you look at the component of GDP, it's quite clear that inflation is taking a toll on them, and it's also telling us that the economy has not fully recovered. And if you want to ask about how do you measure the full recovery beyond just GDP numbers, nominal or real GDP, I think it's also important for us to look at what is happening in the labor market, which is why advanced economists don't joke with unemployment numbers and inflation. In fact, you must have heard how Fed has continued to talk, the US Fed has continued to talk about inflation and unemployment. And in fact, at some point, they've started downplaying the importance of economic growth, because if economy is growing and unemployment is quite low, such growth is not inclusive. So for every economy, inclusive growth is very paramount. So I think for now, I would say to the recovery in the economy, we may not be able to say that, yes, we have attained that level yet. In fact, inflation numbers, are speaking to the achievement so far. If inflation is now over 19%, and we're coming from just less than, in between the 2013 and 15, we're coming from about 10% levels. So in fact, it's a pointer to an inefficient or less optimum economy if inflation is rising, because inflation is simply when you have too much money chasing few goods, when you have less value but more people have more money in their hands. So apparently we could just clearly say that the economy has not recovered yet.
I mean, with this development, I'm just wondering perhaps what will happen to Nigerians, especially the young Nigerians. Would they have to ditch platforms such as fintech and who offer even higher or better interest rates than the commercial banks?
Yes, one of the challenges with investors, especially in the period of high inflation, is they want to go for high return despite the inherent risk in investment that promise high return. At this point, investors will be desperate regardless of the characteristics of the kind of investment product. They will definitely look down on if the investment platform is regulated or not. So I think, yes, investors will be more aggressive. They want high return. However, it is very important for investors to also know that the more aggressive you are about return, you should also know that there are a lot of inherent risk. As a matter of fact, if you see any return above 13%, 13% is the highest rate you will get on government bond. So if you're getting any rate above 13%, if someone promises 20, 30%, you should already know that there's a lot of a covert risk that you are not seeing. It may not be put on the investment certificate or investment description that yes, these are the inherent risk. But it is actually very important that investors are careful. And if you look at Nigeria, the circle of uncertainties have come with a lot of Ponzi scheme. I'm sure you remember the MMM.
Yeah,
it became viral in 2016, and 2016 was a recession year.
Absolutely.
And so periods of economic shocks and high inflation are actually characterized by increase in Ponzi scheme, because people are usually very desperate. They want to make a lot from their income or their investment, but they usually downplay the importance of being risk conscious. So as much as we're seeing that, yes, fintech platforms are offering, some attractive rate above some traditional institutions, investors should also exercise a bit of caution, because it's better to have 7% on your money from government instrument than having to lose all your capital.
But there are issues about trust here between the government and the people. Why should Nigerians trust the government? I mean, it appears it's more money for Nigerians. The interest rate is going to shift now from 10% to 30%. But why should Nigerians trust the government in terms of implementation? I'm looking at something here that has to do with the latest deposits and lending rates in the banking industry, published by the Central Bank of Nigeria website. It says 8 out of the 27 banks paid 1.40% savings interest rate. I wonder what you make of this.
So I think one of the, the challenge is actually because investors, or I would say bank depositors, are not really conscious about the interest rate because they are so little. So I think in a way, the Monetary Policy Authority may want to actually, come in that regard to ensure that, depositors are able to get the minimum rate. However, investors are not so, they are not really focusing on that because inflation at over, 90%, even at the current 4%, based on the 30% of MPR, is still nothing compared to what investors need to cushion the effect and the impact of inflation. So I think that's why most of these banks may not really pay attention, or the bank customers are not also pay attention to that. As a matter of fact, which is why a number of analysts must have talked about how the monetary policy rates are weak, in terms of impacting the economy and the financial system. For instance, we talk about periods that when interest rate is reduced, that banks are expected to borrow more or to give more money to the financial to the real sector of the economy. But this does not always happen that way because banks are always in terms of rate, they are more flexible upward than sticking downward. They would rather increase rate than bring down rate. So again, I think it's also important to highlight that, savings rate is a cost component to banks. It's going to affect the cost of fund. So, for an average producer or a seller, you would want to be slow to increasing your costs, and you would rather increase price. Price is the lending. Cost is savings rate is a cost component for every bank because, for bank, you look at their net interest margin. That Absolutely. Is interest income and interest expense. So they would rather want to keep interest rate low because of asymmetric information. Like I said, investors, in fact, how many Nigerians are aware that the rate has been moved from about 1.5% or 1.7% to 4%?
That's
so they are not
challenge.
So they would rather just bring down cost of fund because people are not aware and optimize price. Price here is the lending rate. They would rather optimize price on the other hand, which is why the policy is a bit tricky because, you talked about the recovery in the economy because now the CBN is caught between the devil and the deep blue sea. Do you have to tackle inflation or struggle with growth? Do you want growth or inflation? So in an economy that we're talking about, less optimal performance as reflected by inflation number. So it's a very difficult time because once interest rate goes up, it's going to affect credit to private sector. And in fact, we are not getting capital importation again. We are not getting investment from foreigners into major sectors of the economy. And if banks are also going to increase interest rate and it will affect lending to the private sector, it's going to have a negative impact on the economy.
So well, if the banks go ahead not to agree with the Central Bank of Nigeria, the commercial banks, and in terms of enforcing this particular policy, do you think the CBN can enforce this? We are just about on the verge of transitioning to another administration, 7 months away perhaps.
So I think, yes, the CBN has, the leeway, the power to ensure that this is enforced. As a matter of fact, the 30% of MPR is just, say, the floor. That is the minimum, threshold for savings, right? The minimum threshold. So it's left for the bank to now push it higher depending on, the competition in the financial system. So the onus lies on them to now begin to adjust upward based on this threshold. However, I think the CBN would rather use other measures to curtail, the impact of inflation, to reduce the impact of money supply. But we have not seen any period, right, where the CBN will have to enforce, the savings rates that banks have to comply. As a matter of fact, the CBN is more like providing guidelines for customers to negotiate. So they are not. It's just left for customers to say the CBN has made this as a threshold for savings. Then you have to give me the minimum of this rate. So I don't think maybe the CBN may want to go the route of saying, attaching a penalty to certain banks for not complying, because there are other measures that the CBN is also using to reduce money in circulation.
So when you take a look at our economy and how we're going, and how we're responding to the effects or impacts of the COVID-19 pandemic, we have a war in Ukraine, China and Taiwan are battling. We're afraid that it doesn't get to what we've seen play out in Ukraine since February this year. But what do you fear the most about our economy?
I think the major problem about Nigeria economy is now the current level of inflation. Like I usually say jokingly that if you want to destroy an economy, just give someone the power to drive prices up significantly. You must have seen, or you must have listened to protests in Sri Lanka, Ghana, and all of these countries. These countries are currently struggling with high level of inflation. As a matter of fact, currently we'll be talking about how inflation will moderate faster in the U.S., compared to Nigeria. And you know that once inflation moderates faster in the U.S. compared to Nigeria, it means it's going to take a toll on our exchange rate. And once exchange rate is also negatively affected, it affects imported items. And all of this will compound, the problems we have in the economy. If manufacturers are now struggling to import, you already know that it will take a toll on the labor market. Higher unemployment will affect consumption spending. Consumption spending account for over 60% of the GDP. That could largely slow down the Nigerian economy. So I think the concern is about inflation, and I think it's also very important to talk about what subsidy payment is doing to the Nigerian economy. In terms of increase in oil prices, we've seen that, government, in fact, we saw recently that this administration is talking about total subsidy removal by next year. So all of these are concerned, from inflation to subsidy payment that is taking significant toll on government, fiscal condition, and government is borrowing heavily. We see how it's affecting, ways and means, and a number of other factors. So at every point in time, we have to begin to look at how inflation is dragging the Nigerian economy and how subsidy payment is actually waning the ability of government to provide, adequate facility or utilities that would drive the economy at large, and how it's creating problem for future generation, because in an economy where debt is increasing at a very high rate and taxes are still quite low, tax to revenue ratio, Nigeria has one of the lowest in the world. It just tells you that in the next 5 to 10 years, you begin to expect increase in tax rate in Nigeria, because at some point, someone has to pay for the debt we are accumulating today, because in economics, we always say that there's no free lunch anywhere.
Even in Freetown.
Exactly.
Well, thank you so much for speaking with us here on Business Nigeria. Temitope Omosi, thank you so much.
Thank you.
Is a partner of the investment strategies at the Alpha Invest Asset Management Limited. Thank you so much for your time.
Thank you.